Alright guys, Darren from Honest Money and welcome back to another video. So in this week's video we're going to be taking a look at allowable business expenses. Now I know a lot of you guys are either in the process of starting a business or already run your own business, so hopefully you guys are going to find this useful. What I want to do initially is just go over what allowable business expenses are, as it's not as simple as it sounds, and then on the next slide I'm going to give you a very simple list of some of the most common business expenses that I have seen during my time in business. If you've got any of your own ideas, let me know in the comments below. Just before I get into it, I just want to say I am not an accountant. However, hopefully the information I give you in this video is accurate. If it's not, again, let me know in the comments. I'll probably create a pinned comment at the top which will contain any corrections to this video along with any tips that you guys post. So what are allowable business expenses? So allowable business expenses are costs incurred by the business that are necessary wholly and exclusively for the business. Now on paper that sounds super strict, however it's not quite that black and white, and there are some grey areas where you can sometimes claim where it isn't necessarily wholly and exclusively for the business. So there are two types of allowable business expenses. The first one is tax deductible expenses, and these are the really good ones as these can be used to reduce your corporation tax bill. So for things such as your office rent can be used to reduce your corporation tax bill. You also have non-tax deductible expenses, which are okay for your business to buy, but you can't actually claim any tax relief on them. So there's no corporation tax relief available on non-tax deductible expenses. So things such as entertaining clients. The rules aren't always black and white, as I just said. So for example, mobile phones, you're allowed some personal usage, but you can put them through as a 100% tax deductible expense. And there are many, many other grey areas. So always discuss these with your accountant to see whether there are savings to be made. Now, non-tax deductible expenses may not sound very appealing on the face of it. However, they can save you tax on your personal liability. For example, if you wanted to entertain a client, if you tried to pay that personally, you'd have to pull the money out of the business, so you'd be paying personal tax on that money. Now, depending on how you pay yourself, most directors are paying themselves with dividends, so you may be paying dividend tax on that money. However, if your business pays for it, despite the fact they can't claim back corporation tax relief, you don't have to pay that dividend tax on it, as the money hasn't actually been drawn out of the business just has paid it directly. So don't rule out non-tax deductible business expenses as a bad thing, as they still have their place. Remember, some expenses are classed as capital expenditure as well. Now this normally applies to larger purchases, for example your PC or office furniture, so they aren't treated as a typical allowable business expense. Instead they're classed as capital expenditure, and then you recoup that via a capital allowance scheme. Now you will need an accountant for that, as it is quite complicated. It's not as simple as just claiming back the depreciation, because there are different allowances available depending on what you are actually purchasing. But it's definitely something to be aware of and something to discuss with your accountant. Now the actual expenses themselves can be paid directly by the business. So for example, the office rent may be paid by the business. However, if an employee or yourself as an employee of your business pays for the expense, then the business can reimburse you tax-free, as you are just basically buying on the business's behalf. It's also worth keeping in mind that if you are VAT registered, that additional savings may be available if you buy stuff through the business. For example, if you buy the computer through your business, you may be able to claim all that VAT back if it is 100% for business use, where if you bought that personally, you wouldn't be able to claim that VAT back. And then finally, one thing to keep in mind is up to 7 years of pre-trading expenses can be claimed. So if you're starting a business at the moment, or you're planning to start one in a few months, and you've just bought a PC or a laptop for that business, make sure you keep paperwork for all of that stuff, as you can claim up to 7 years of pre-trading expenses. Before I go on to the next slide, if you're unsure about anything, ask your accountant. Like I said earlier in this video, I am not an accountant, so always double check this with your accountant. What I usually do, if I'm not sure about buying something, I call my accountant first, or I email them and just ask them, is this an allowable business expense? And then sometimes we'll have a discussion whether I can justify it as a wholly business purchase or not, and then they'll come back to me whether they think it is viable or not. So on to common business expenses. These are some of the most popular ones that I've seen during my time in business. So up first we have office rent, which is a really obvious one. That also includes business rates. So if you pay business rates on any of your premises, you'll be able to claim tax relief on that. Also, if you have any utility bills such as your internet, heating, electricity, stuff like that, you can claim tax relief on that. Alternatively, or in addition to that, if you also use your home office, you may be able to claim some tax relief on that as well. I personally use the flat rate method, and that allows me to claim £6 per week tax free from my business, which is also can be offset against corporation tax. So I get over £300 out of the business tax free per year that the business does not pay any corporation tax on. Up next we have office equipment, so things such as your computer, your desk, the printer, stationery, stuff like that. Any of the more expensive items such as your desk or your computer may be treated as capital expenditure instead and then managed under the capital allowances. You'll still be able to claim a certain amount back in future, it just works a bit different how business expenses work, and again, speak to your accountant about that. You also have salaries and you should be able to offset 100% of these against your corporation tax bill. Even if you're a director, you'll still be able to offset against the tax as an outgoing because it is a genuine business expense. As I just said on the previous slide, mobile phone, so one phone per employee, should not raise any eyebrows at HMRC. You then have mileage allowance payments. Now, if you're doing a company car, I'll come back to that in a moment. I've also got a whole video about company cars, which I'll link to in the top comment, which I released last week. So the mileage allowance payment system allows you to claim back a certain amount of money depending on how many miles you do. So up for the first 10,000 business miles that you do, you can claim back 45p tax-free from the business, and the business can then offset that against their corporation tax liability. And anything above 10,000 miles, you can offset at 25p per mile. So make sure you keep a mileage log, as that can be a super beneficial way of getting money out of the business tax-free and also reducing your corporation tax liability. Up next we have travel, accommodation and subsistence. So this applies when you're away from the office or working at temporary accommodation. So for example, it doesn't cover traveling to your office, it does not cover commuting, it does not cover buying lunch each day when you're at your own office. However, if you need to go away for a meeting, you need to stay at a hotel for a night, it will cover things like that. So travel, accommodation and subsistence are covered in certain ways, but not if it is, say, your traditional day when you're in your own office commuting to your regular place of work. Up next we have entertainment and Christmas party. Now these are treated slightly different. So as I mentioned on the first slide, entertainment is not a tax deductible expense. So if you've got a client over, although you can put the expenses through the business, you cannot claim corporation tax relief on that. However, if you're throwing a Christmas party for your staff, you can spend up to £150 per employee and you can claim that back as a tax deductible expense and offset it against your corporation tax. Up next we have accountancy fees, banking fees, business insurance. So if you're running a limited company, you're probably spending the best part of £1,000 on a good accountant per year, and your banking fees are probably £5, £10, £15 per month, and on top of that you have business insurance. So all of those things you can offset against your corporation tax liability, which will save you a reasonable amount. Marketing, with pretty much any marketing you do, you should be able to claim back. And sometimes, again, this is another one of those grey areas where maybe there are perks available by purchasing marketing schemes. For example, a number of the golf courses near me offer kind of a corporate package where instead of paying for an annual membership, you pay to sponsor their tees, or you pay for some sponsored signage around the grounds, which generally works out about the same price as a corporate membership. But instead, as you're buying advertising, they then give you some free vouchers that you can give to your friends, family, or use yourself to play 3 rounds of golf. So again, that is a grey area as to what you can actually do, but for that purpose, maybe you can put playing golf for your business as an expense, but actually it's treated as a marketing cost, even though you're getting to play golf off the back of that. But again, speak to your accountant about that. It's how comfortable you feel playing in those grey areas when things aren't 100% clear. Next up we have clothing. So if you have to buy uniforms, or if you have branded clothing, for example, the Honest Money t-shirt, this is a tax deductible expense. Or if you need any safety equipment to carry out your job, they should all be classed as business expenses that you can offset against your tax bill. You then have P11D staff benefits, so things such as your company car, medical insurance, anything that is a benefit in kind to the employee, you would usually be able to class as a tax deductible expense. But again, check that with your accountant, as not every P11D expense is actually tax deductible. Then finally, there's pension contributions, so your business can contribute towards your own pension or employee pensions, and then that money is tax deductible from the corporation tax. So those are some of the most common business expenses. If you guys have got any that I've missed that you think may be useful to a lot of people, let me know and I'll add them into the top comment. If you found this video useful, I'd really appreciate it if you take a moment, scroll down, hit that like button, and if you want to see more videos from me, subscribe to the channel, and I'll see you guys in next week's video.